Can you incorporate your business in other states? Hi, everyone. My name is Tony Watson, coming to you on behalf of Robert Hall & Associates. I am a senior advisor and tax consultant at Robert Hall & Associates. In today's topic, we're going to discuss, can you incorporate in other states? Currently, I'm sitting in our office, the Robert Hall & Associates office in the beautiful sunny state of California. And so I have this question come across my desk a lot. Tony, I'm starting an LLC. I'm starting an S corporation. I'm starting a C corporation. What's the best state for me to incorporate it? And I always have to mention that California specifically is a very unique state. Same with New York, same with states like Hawaii. But most other states outside of those three states, the other 47 states here in the US, the rules are a little bit more lackadaisical, meaning that you will have lower filing fees in other states. You will have less compliance issues in other states. But at the end of the day, you need to understand the do's and don'ts of incorporating elsewhere when you fully reside in a state like California, New York, Hawaii, or any other state. There are 7 or 8 states in the US, and this list changes quite often, so I'm not going to list the list today. But there are about 7 or 8 states in the US that tax their residents on their worldwide income. For example, California will allow a California resident, somebody who registers to vote here in California, drives around a car with California plates, has a California address on their driver's license. California's franchise tax board will allow us to incorporate elsewhere in the US, but not to avoid California state income tax. And so I always mention to clients that, sure, you can start a corporation in Delaware or Wyoming or Wisconsin or Texas or Florida or Nevada, wherever you want to incorporate yourself, but it's not going to be to avoid state of California income tax. You will achieve greater asset protection benefits elsewhere in the US, but not additional tax savings benefits. California is part of that 7 to 8 list of states, 7 to 8 states listed that tax their residents on their worldwide income. So as a California resident myself, let's say that I have several rental properties in Austin, Texas. If I incorporate LLCs in Austin, Texas to hold title to my rental investments, Texas has a pretty straightforward process for filing LLCs and other entities with their franchise tax board. The filing fee per year is very low. You'll be assigned a web file ID number to file electronically in Texas. But as far as an annual filing fee is concerned, it's nothing comparable to the state of California. California says that's fine. If you want asset protection in the state of Texas for your rental property, we're completely okay with that. But if if you, the taxpayer, reside in that state, such as California, you are a resident of that state, and therefore California will tax you on your worldwide income. So I will have to file foreign jurisdiction in the state of California for my Texas LLCs and still pay the annual $800 filing fee to the franchise tax board. Am I avoiding tax in this situation? No. And in this case, just to be a little bit more detailed, the $800 annual filing fee to the state of California really isn't a tax. I know that they call it a tax, but by definition, it is not a tax. It's more like a parking ticket for parking your butt in the state of California. So I can have 15 different LLCs in 15 different states, but if I reside in the state of California, once again, definition of residency is where are you registered to vote? What address is on your driver's license? Well, license plates are on your vehicles. If by definition I am a California resident, I will still have to pay the state of California filing fees on an annual basis and also file foreign jurisdiction here in the state of California. Now, once again, if you filed an incorporated entity elsewhere in the US, you could be achieving greater asset protection benefits. Full transparency, I am not an attorney. So if you feel like I'm stepping a little bit out of my lane of expertise here, I want you to understand that if you take any of this advice today as legal advice as to where you should be incorporated, please take that information, take those questions to your legal advisor and double check just to make sure that everything you've heard today on today's video is accurate and correct. We will always bow out from a legal perspective and an asset protection perspective. We will always bow out to the legal advisors because that's what they are there for. They are there to protect you from any potential legal situations. I do understand, though, that certain states like Delaware and Wyoming and Texas and Florida, some of these states offer structures such as series LLCs, where you can have 10 different LLCs with one filing requirement, but actually allowed each of those LLCs to provide individual liability protection for each business or each rental investment in each of those individual LLCs. California doesn't conform to that part. So if you have 10 LLCs in Texas and you file for a series LLC, California is still going to want $800 times 10 LLCs. But in other states, there might be greater benefits for structuring your syndications or your real estate investments or business activities in this way. Delaware happens to be a haven for shareholder protection laws. I'm sure that you have all heard that Delaware is one of the meccas of places to incorporate, all the way up to the presidents of the United States, top shareholders of billion-dollar corporations. They find solace in Delaware because of the legal and asset protection benefits. Once again, though, if you reside in the state of California, or if you reside in New York, or if you reside in Hawaii, any state that taxes its residents on their worldwide income, you can incorporate all of your businesses in Delaware. But at the end of the day, your resident state of California, New York, Hawaii, wherever you live, they will probably, more likely than not, require you to file foreign jurisdiction in the state of residency and still pay the annual filing fee to your resident state. So to recap, can you incorporate elsewhere in the US? Absolutely, but not for a tax savings benefit. 99% of the time. More likely than not, you're incorporating elsewhere for the greater liability and asset protection benefit. You also have to understand that if you are registered as a business in another state, more likely than not, your mail is going to be sent to a resident agent for service of process in that state. That's one of the benefits of incorporating elsewhere for greater asset protection, is so that business, that investment is not attached to your personal address, your personal social security in some instances, and you're creating asset separation, which in turn creates greater asset protection. So what I'm trying to tell you is that if all of your mail is being sent to another state, you also have to have a trusted advisor in that part of the US that can forward you very important information from the IRS or from the state revenue agencies, just to make sure that things aren't falling through the cracks. The advisors here at Robert Hall & Associates can help you set up and incorporate your businesses in any of the 50 states. And we can also connect you with resident agents for service of process in all of those states, just to make sure that if you are trying to separate business and personal assets for greater asset protection, that we are doing it in the right way and nothing is falling through the cracks. Still have questions about this? Interested in a free consultation, free complimentary consultation? Feel free to click the link that you see on the screen, reach out to Robert Hall & Associates, and we look forward to speaking with you. Have a great day.